presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Tampa. Hey, Al, what's going on?
Oh, it's a beautiful thing. I mean, if your listeners don't get the gold report, they're missing out. I mean, with your gold report, you just printing money. I love it.
You're my best dad out there, Al. Let's go to Jeff in New Jersey. Hey, Jeff, what's going on?
Great. Hey, listen, I was calling to thank you. A few weeks ago, you were prompting on your show to fill out that $10,000 grant.
Yes.
So I filled it out, and just a couple days ago, I found $1,000 in my business checking account.
That's awesome, man. That's awesome. Yeah.
And I owe it to you, because if it wasn't for your prompting, I would have just assumed, no way I would have gotten anything. So I wanted to thank you.
No, we appreciate you growling a problem with us here.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all have been having a good day. Today we're going to be joined by Tim Ord. He's the author of the Ord Oracle. That's going to be during the next segment and the segment following. Let's take a look at what we got going on right now in the market. You have the composite trading flat right now at 19,742. You have the Dow Jones Industrial trading off 0.44% at 44,817. You get that DXY cracking lower at 105.74, trading off about 0.47%. You have crude oil staying relatively in its, past few weeks neighborhood, about 68, 66, trading up slightly, 0.18%. OPEC is going to continue on with their production cut, just to kind of stabilize price, they said. You have gold here. Now, really looking forward to hearing what Tim has to say. Now, he usually talks about the GDX, so you have that with the other miners. Not so much the gold contract, but you're getting some consolidation for the past week or so, and we're hovering right around this 2,654 area, trading off about 0.82% today. You have copper trading flat at 419, the Russell off 0.83% at 2,412, and then you got silver. Silver's trading off 0.44% at 31.77. And we got the SPY flat at 607.29. Tesla's roaring up today. Oh man, that actually reminds me. I was going to speak about this initially, but Rivian. Okay, so up 3.97%. You have Ramaswamy and there it is. He made a tweet. Okay, so Vivek Ramaswamy, he's going to be on the Doge, DOGE board with Elon Musk. Kind of bearish on Rivian. And what he says is Biden is forking over $6.6 billion to EV maker Rivian to build a Georgia plant that they've already halted. One, and he says, quote, justification is the 7,500 jobs it creates, but that implies a cost of $880,000 per job, which is insane. Smells more like a political shot across the bow. That's tough. Luckily, this was from November 26th, right? And it didn't matter. It still moved up, right? I mean, they're still getting that money. It'd be unfortunate because Rivian needs all the money it can get to get profitable, if they even can. I'm starting to have my doubts about this company, but I'm a bag holder, so what can I say? You're up 4% right now at $12.44. What I wanted to start the show off with a little bit is talking about Qubit. Okay, it's quantum computing, thin film lithium niobate, up 10.31% today at $7.75. Why are we talking about this again? If you missed my shows earlier in the week, I was going over a short seller research paper from Iceberg Research, and they said that quantum computing is not everything that it seems. Again, this is the company Quantum Computing. So what were they saying? They were saying initially that this whole concept that they're going to start producing chips, then they have their own foundry, is just immaterial. They sent a guy out there to look at where the foundry was supposed to be, and it was in an office park, okay, and just some kind of small office I looked a little bit further. They had only allocated $2 million for foundry equipment, which is totally not enough. If you're doing small kind of tests, I mean, that's fine. And that's most likely what these guys are doing. I called the business park as well, and I did get on the phone with a woman. She left me, I'm going to pull up this message because it's just kind of interesting to see. She said, we don't actually, okay, here. She says, I do have all the vacancies. We don't usually permit manufacturing in the park. And then so I called her back and I was asking, there's a company saying that they are basically producing computer chips in the park. Do you guys allow that? And she's like, no, there's no manufacturing going on here like that. And this is the management of the company. So I don't know what to make of that. It's supposed to be completed in the foundry. The foundry is supposed to be completed at latest of March of next year. But the location isn't suitable for a large commercial foundry. Additionally, they have these 2 orders, one from a large Asian company. That's kind of about all the exposure you get on that or clarity you get on that. And then a research school, which ended up being the University of Texas. And the people at University of Texas were reached out to, and they said it was just such a small amount just for testing. This is not, we're just seeing how thin film lithium niobate can operate within photonics. And you get a lot of research going on right now for silicon for photonics. So can thin film lithium niobate even compete in the short term? Maybe long term, it might be better for it. But that's a whole new prima materia that you're trying to kind of get into. So Qubit, very strange. I'm not sure what's going on with this. It doesn't seem like it has a lot of short interest out, so I don't think it's a squeeze by any means. But trading up 12.48% right now at $7.89. It may be worth shorting for, it's hard to time that, I think, for like Q1 25, like actual Q1 25. But if it comes out that, hey, actually we were just kind of blowing smoke here, this stock can go right back down to 35 cents from $7.87. And it wants to test this high again. I think it does. You have a lot of people talking about this $8 mark for whatever reason, and that's just kind of a psychological thing. Very low volume today compared to the volatility that you had the weeks prior. But anyways, that's what's going on. A lot of pumps and dumps getting on here. Speaking of that, you can look at Archer Aviation. This is a really good strat, I think, which is you sit on Wall Street Bets and you see all these just kind of weird stocks that don't have anything tangible that they're selling, and they're all just kind of promises. And you let them run it up, and then you short this thing on Monday after the holiday. Making an all-time high on a half day was sketchy in and of itself. Big shorts coming out in this area. Made some probably good money. I don't know what this pump is today. Maybe it still is people on the copium. I'm sure flying electric taxis are great, but when does that come out? Archer's up 13%. Doesn't matter, I guess. Stay right there, folks. We'll be right back with Tim Ord of the Ord Oracle.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. Let's take a look at FBTC. Someone in the den was talking about it. Who was that? Frank. So I think from what I'm seeing online, they have 198,581 Bitcoin to 226.65 million shares outstanding. That gets you 0.00088 Bitcoin per share outstanding, which would translate, this is pretty, well, let's see. What is the Bitcoin price trading at right now? Let me see here. Okay, so you're right under 100,000. We can kind of just say, 100,000. So you're trading at a little bit of a discount. You get roughly, you're trading a little bit of a discount here, but not by too much. Interesting stuff. Definitely not the same as MSTR, which is what we were talking about. And then you get Mara as well. This is getting hit today, but this is still, nearly double. The equity value is to the amount of the value of Bitcoin you have per share. And then I think Mara is doing the same thing, where they're doing these convertible bonds at zero yield. I have to look more into Mara to see if this makes sense, if that's at a premium or not. But interesting, when you get closer to the net asset value, right? This is kind of, when you do all your math on that, this is kind of what you're expecting with stuff, right? MSTR should roughly be, $171 in equity, right? If you're considering net asset value. This is kind of what FBTC is showing as well, right? Like that's roughly what you would get in Bitcoin compared to the shares outstanding. All right, let's move on just a tad. We are joined right now by Tim Ord. This is every Tuesday and Thursday. Of course, he could not join us on Tuesday, but that is all right. It's good to have him back on. This is Tim Ord of the Ord Oracle. If you want to check out Tim, you can go to ord-oracle.com. Additionally, you can go over to TFNN.com, and when your computer loads, you will find on the Services tab 2 fantastic webinars from Tim Ord, The Secret Science of Market Tops and the 6 Secret Ratios that every trader should know. We've had a few people purchase those recently. Fantastic. They've been communicating with me on it, and they really enjoyed it. Tim, it's good to have you back. How are you doing?
Good. So let's jump in the market, see what's going on.
I think so. Give me 1 second to pull everything up here. All right. I got chart 1 up now.
All right. This is kind of a short-term chart. This chart, I think, was triggered on November 15th, so that's, 3 weeks ago. let's see, I think the low was, November 15th and reached a high 10 days later on November 25th. Anyhow, I guess you got to define what the chart is. Anyhow, the bottom window is the NYSE advancing issues over declining issues with a 3-day average. And what this there's to really get bottoms to market, you have to have kind of a sign of weakness or a kind of a capitulation or a panic low. Then right after that, you got to have a sign of strength. If you don't get that combination, then it's not a bottom. What will happen if you don't get the sign of strength right after a selling climax per se, you'll have another selling climax until finally you do get a sign of strength, and that's when the bottom occurs. So there's a lot of different indicators to define bottom. There's advanced decline type indicators where you have an exhaustion to the downside and a sign of strength afterwards. You have a volume type exhaustion move to the downside and a sign of strength afterwards. There's McCollum Oscillator type capitulation to the downside, then a sign of strength to the upside. Then there's a summation index, McCollum summation index, which is a longer term type indicator. But the one we're going to look at today, and actually there's this WAG breast thrust indicator, does something similar to the one I'm going to show you right now. But I'll get back to the bottom window. You have to have a sign or a capitulation to the downside. That happens when the advanced decline 3-day average hits below 0.7. And that happened on November 15th. We had a 0.68 reading. Then within 10 days or less, preferably, you have to have a sign of strength, and that's a reading above 3 on this indicator by November 25th. Well, it happened to hit 3.28 on November 25th. So you actually have a capitulation and a sign of strength. And these type of things only happen in uptrends. They don't happen in downtrends. Downtrends, you get a capitulation to the downside, no sign of strength, more capitulation to the downside. So it's important to see that sign of strength right after a low. We had that November 25th. And so I shaded in let me pull this other thing up here. I shaded in light tan or pink there the times when you had a sign of weakness to a sign of strength. And if you notice, those are all coming out short-term lows. So we just had that. So this is not a top of any consequence. You can have some mild consolidations, but not big declines in the market, not usually anyhow. There's one failure back in 2003, looks like about August. The market did have a sign of strength and it kept going down. But in general, this indicator works about 90%, they're at 85% of the time. So it's something to really pay attention to. So I think next week is probably going to be a sideways down week, and I'll show you that, the reason why. But when this indicator flips to a bullish signal, usually at least they're multi-weeks, if not even sometimes multi-months. So we're beginning a new up phase here that will last at least into January, maybe February, March, don't know how long, but the uptrend's intact. So that's good. So let's flip to chart 2.
Okay.
So we're bullish along the S&Ps in chart 2. This is a weekly indicator, and this is an indicator goes back, looks like a couple of years, lower a couple of years. And I got shaded in green. Anyhow, the bottom window is the VIX. Next window up is the SPX-VIX ratio. And the next window above that is the weekly SPX. So this is a weekly indicator. And what I'm trying to show here is that the green shaded areas are times when the S&P's made a lower high and the SPX-VIX ratio made a higher high. That's a bullish divergence suggesting the rally is not a double top, but the market's going to keep going higher. And this happened back in early 2023, again in late 2023, looked like about April, May of 2024 this year, made kind of a double top. Ratio made higher highs, suggests the market's going to go higher. Then August and September of this year, the SPs made higher highs, and the ratio made lower highs, and I noted that in pink. Now, it turns out that was a false signal. Actually, I did get out and I got back in. But the market since then has made higher highs, along with the SPX VIX ratio making higher highs. So we're back, even though it did give a signal, and it's actually a false signal. We're back on the bullish bandwagon, I guess you might say now.
Okay.
And even on the recent high, we made a higher high in the SPX ratio. So on a weekly time frame, so this is a chunk of time. So there's no sign of a top of any consequence coming anytime soon over the next several weeks. I'll put it that way.
Yeah, Tim, stay right there. Folks, we'll be right back with Tim Orda after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. This is Jacob Schub. I'm joined right now by Tim Ord of the Ord Oracle. If you go over to TFNN.com right now, you can go over to the Services tab. We have 2 fantastic webinars from Tim Ord. Strongly recommend checking those out. If you decide to do so, once you pay, please send me an email at jacob@tfnn.com. I will give you access to those. Additionally, you can go to ord-oracle.com and check out Tim's newsletter as well. Tim, before we went to the break, we were kind of looking at chart 2 with the SPX still kind of bullish overall.
Right. So we got the dailies flipped to a bicycle on that advanced decline 3-day average thing, suggesting an impulse wave has started. This indicator on 2, which is the SPX VIX ratio, there's bullish divergence. S&P is making a higher high. That ratio is making a higher high. That's the definition of an uptrend. So it's narrowed down to a smaller time frame. Let's go to chart 3. And this chart is nothing real serious here, but the top window is the SPX, a little bit messy, I know. The bottom window is the VIX. But on the top window there, I have a Bollinger Band on it, and I had blue circles around the times when the SPX, or this is the SPY gets above the Bollinger Band. A lot of times that puts it in a consolidation. Sometimes just flips sideways. Sometimes there's a decent pullback. But anyhow, we're up against that Bollinger Band now. I have a kind of a light blue circle area up there. You can see what's going on. We're kind of running in that Bollinger Band. It's kind of a resistance area. And also have the previous high, a dotted blue line across, comes in around 600 on the SPY, and that's just the previous high, and that should be a support area. So downside's not much, but seasonality for next week's actually at best sideways and probably down a little bit. So 600, we may pull back down to 600, don't know. We're starting to see little panics in the ticks and trend. I got it marked in red there. It's over the last couple of weeks, the trend and ticks are starting to reach bullish levels, and that's really good in an uptrend. The market going up, and you actually get panic in the ticks and trend while it's going up, suggests this is probably there could be a mild consolidation, but that's really bullish to see panic in an uptrend. That usually implies that eventually this uptrend will continue. But I think when there's a good chance we could possibly pull back to 600. And yesterday was a decent day up. Volume expanded. If you look down at the bottom window, which is the VIX, yesterday the VIX was up along with the S&Ps. And that's on a very short-term basis. That's kind of a minor warning that the market's probably going to start to consolidate. So I think that's probably what's going to happen. I think in general we're going to pull back to around 600, find support, and from there start going higher again. Okay. So nothing real serious. Today is, we're down today still. We're up 4 days in a row going to yesterday. If yet today was up, we'd be up 5 days in a row. That would be bullish. But, we got the holidays around us. Volume's probably going to drop off a little bit. Mild consolidation, 600. Bigger trend still up. Monthly or the weekly charts remain bullish. Everything's fine. It's just kind of probably going into a doldrum probably next week. So a little bit of patience, nothing significant that I can see that this is nothing of a worthwhile top for me, even though the market's up, I think, 26% this year. It was up 20-some% last year. So far, so good. I think this year could still be 20% up. Yeah. So that may change, but that's what it looks like so far. So
absurdly strong market these past 2 years for sure.
Yeah, and everybody, trouble is, that Trump's coming in, and he's, when everybody agrees that the market's going to be really good, and then Trump's kind of putting that euphoria forward.
Yes.
And that's kind of a sign to worry, actually. So, but that worry hasn't showed up in the market yet. I'm not seeing anything detrimental on the intermediate term scale yet. Sure. So, but I'm watching real carefully here, extra careful. So, but right now, so far, it looks fairly good sailing on the S&Ps, at least going into first of next year. So let's take a look at the gold market.
Yeah, let's do that. Yeah, I think you have gold trading off, at least the contract trading off right now about a full % at 2,651. Let's take a look what you got looking.
All right, GDX, actually the top window is the RSI for the next window down, which is inflation-deflation ratio, and it made a triple bottom. We're extremely low on the inflation-deflation ratio. And normally when this ratio crashes, now it really goes through the floor, that's when the RSI gets below 30. It's usually a good time for an intermediate term low. And all those red dotted lines across the graph here, and this chart goes back 2.5 years, whatever. It marks at least intermediate term lows. And we had one here mid-November, November 15th. We had 29.69 on the RSI. That day marked a low. And we kind of pumped up here. And it's actually inflation-deflation ratio is it's down around 0.14 right now, which is pretty much matching the low. So downside on GDX is extremely unlikely to go down. I'll put it that way. So we're at another low, even though the market has popped up a couple 3 points. It's kind of going sideways here. GDX and XAU both are. It does appear an intermediate term low is forming here. I got another indicator. Chart 5. This is a little bit shorter term indicator that works just as well. Sometimes this indicator shows divergence, but anyhow, the red lines are times, red dotted lines are times, the top window is GDX, next window down is up-down volume, cumulative up-down volume for GDX, next window lower is the cumulative advanced decline for GDX, bottom window is GDX GLE ratio. When 3 of the 4 indexes hit the lower Bollinger Band, you're at a low. Well, back in November 15th, all 4 of those GDX, up-down volume, advanced decline, and GDX GLD ratio hit below the Bollinger Band. And so that's another short-term indicator. Works pretty good at tops, too.
Okay.
But we got 2 types of different indicators here giving buy signals. So we're at a low here. I don't see any danger to the downside. We already had kind of a panic type situation going into that November 15th low. So it's a mild consolidation. Declines over. I think it's probably in general, intermediate term wise, this is a good buying opportunity.
Okay.
So this market has further to go to the upside.
Yeah. Well, Tim,
want to hear the music?
Yeah. Tim, stay right there. We have one more chart to go over. Folks, we'll be right back with Tim Ord of the Ord Oracle after this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Shoup. You're watching The Tom O'Brien Show. I am joined right now by Tim Ord of the Ord Oracle. If you want to check out more from Tim, you can go to the ord-oracle.com. You can check out his newsletter there. We were taking a look at a potential, I guess you would say, bottoming signals in the GDX. It'd be a good time to kind of start adding some positions. We're on chart 5, might be moving over to chart 6.
All right, chart 6.
Yeah.
This is another indicator that picks out intermediate-term lows. This indicator is probably at least a multi-week, if not a multi-month signals. Anyhow, the bottom window is the 18-day average of the up-down volume. The next window higher is the 18-day average of the up-down volume. So a little bit different twist. It's not a cumulative, but an average. So it shows a little bit different picture. But anyhow, what's important on this, again, you got to have capitulation. And this this chart shows capitulation. Top window is GDX. But anyhow, capitulation happens when the up-down volume indicator and advanced decline indicator both hit below minus 40. On November 15th, we hit advanced decline hit minus 43.46, and on November 15th again, the up-down volume hit minus 48.45, 48.45. So that pretty much marked the low, and what normally happens right after this, you can't quite tell on this chart, but normally there's a sign of strength. And I think we're in the midst of that sign of strength right now. Sometimes it takes several weeks to get going, but every time it hits that capitulation, you usually bounce off that low pretty strong. I think we're in the midst, even though it hasn't gone far yet. I don't think the market is capable of going down. I guess worst case scenario, it could test the recent low, which I think is a couple points lower than where we are right now. But right. I think the energy to the upside on GDX is going to expand. I think the pattern that's forming on GDX, which is the top window, the head is a 2022 low, right shoulder is late 2023, early 2024. We're going to take a shot at that neckline, which is up around 43, give or take. And will we bust through it next time around? Actually, I do think we will. This head and shoulders pattern has an upside target around 60, 65. So I think, which is ironically is also the 2012 high, I think it was. So that is the resistance area up there. But I'm thinking we're going to head back to the old highs. What happens from there, I don't know. But that's what it looks like is going to happen. I got some other signals that generated buy signals back in May. And minimum time frame for those signals was a year and a half. That implies this market's going to rally into November of 2025. Mm-hmm. So I think next year sometime we'll reach that 60-65 range on GDX. And from there we'll have to reevaluate. But this market's still in the early stages. I think we got at least a year to go here before a meaningful top. And it could be 2-3 years. There's some cycles that I've done, that this current rally could go all the way into 2027. We'll have to wait and see, but at least we got another 12 months at a minimum for GDX to rally. And a lot of these little stocks that are down in the penny stocks will probably turn into, $1, $5, $10. Probably
Sure.
Some of them turn into $10. But we'll have to wait and see. But it's a good time if you're looking at the bigger picture. This is a decent low to buy on. This is probably the last time you'll be able to do it, in my opinion. It's going to be a while. I don't think there's going to be any cheaper times going forward than right now, because I think next time we're up, we'll break that neckline at 43, head to the upside target. So looks good.
Yeah, fantastic. And I can see too, like obviously the gold contract has gone up so much. You're not seeing the big pull with the miners just yet. I think in this interim we've experienced, there's been, how could I say, like different industries, like you have nascent AI kind of investing that was going on and everything. Once that all settles out and then the people start seeing the opportunities, and this is more of a fundamental look at it, but I could also see, those miners start reflecting an equal increase, that you saw in the gold contract. Yeah. So.
Yeah, it's going to be, I think, fun year. And also, I looked at the materials sector.
Yes.
And it's actually showing a really bullish kind of a setup. So materials, obviously, gold and silver are materials.
Right.
So the whole, I don't know what that means. A big boom in building is going to go on. I don't know.
No, well, it makes
all
sense.
The materials are starting to show some rise here too.
Definitely. I mean, to that point, one, if when you come back on Tuesday, if you want to bring materials chart, that'd be awesome. But your hunch is, I think, correct as well. I think there's going to be a lot of say industrialization. It obviously won't be like how it was last century or something like that. But production of more high-tech stuff is going to start happening within the States, and that's probably contributing to movement up in that. Well, Tim, thank you so much for coming on. It was great having you.
All right. Well, thank you.
Yeah, I'll see you Tuesday.
We'll talk to you
Tim?
next Tuesday.
Yes, sir. All right, take care, Tim. Yeah, folks, again, if you want to hear more from Tim, you can go to, again, ord-oracle.com. It is fantastic. I'm getting the emails and notifications right now. I think there's something up with the DNS, so I'm going to have to check that after the show today. That's fine. We'll get that back up and running for TFNN.com, but he does have 2 fantastic webinars on there. And again, I've had a few people purchase those recently, and they have just absolutely loved it. If you decide that you want to do that, once you make the payment, just go ahead and email me at jacob@tfnn.com so I can apply access to you. If you need anything else, you can always just email me. My number is in the email as well. I'm not going to give it on YouTube, but yeah. Okay, let's move on a little bit. What do I want to move on to? FBTC. Okay, I did the math on that. It's like at $1 discount. Nope, it's actually perfect right now. We were looking at it. It's about 86.51 Bitcoin that you hold per share, and we're trading at 86.56. And again, this is what, you almost can't even argue that like MSTR has a liquidity premium at that point, right? Like this is probably just like meme stuff at some certain point, or it's just in the colloquial like use, right? Everyone's like, I don't know how to get in Bitcoin. I'm just gonna do MSTR when you have all these other kind of, Bitcoin holding companies. So anyways, let's see, let's move on here. I can talk a little bit about Sentinel-1. What happened, man? Off 13.53% at 24.79. I'm almost looking to see if I can get in here and, kind of buy the dip a little bit. Because I think this was a pretty intense sell-off for what happened. Give me 1 second here, if I can get everything up. I thought I had it. But, man, it's, what I'll say, too, is it's tough to be a cybersecurity company that has AI and you screw up earnings like that. We'll talk a little bit about that over the short segment before the end of the show. Stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. I was just joined by Tim Ord. If you missed it or you want to go back over what Tim was talking about, you can do so by going to our YouTube channel, Tiger Financial News Network. At the end of programming today, our producer is hard at work getting those clips up for you. If you decide to do so, please consider giving that video a like and consider subscribing to our channel, as it helps us out immensely. And we want to continue to bring you fantastic analysis. Take a look right now at Sentinel 1 off 13.56% at $24.78. Huge gap down for the day. Big volume as well. You know, nothing was extraordinarily bad for them. It just was kind of in line, and really it was the forward guidance that was kind of in line. They have a massive competitor in CrowdStrike, and it's going to be really hard, I think, for them to surmount that. I mean, the stock's still up, you know, for this year. Give me a second. I'm on the 6 months, actually. No, it had a year today of a year high of 30.76, trading it right now at 24.77. But before that gap down, you had, you know, right around that 29.32, touching around that area. You know what Sentinel 1 has going for it, in, you know, competition with CrowdStrike, is one, they don't brick the internet when they push updates to drivers, but then two, it's cheaper. Now the problem with that is you end up having to mix it with something else. So it seems like one of the big compositions is Sentinel 1 and Huntress. And this is usually cheaper than just buying the full suite for CrowdStrike. But yeah, they had net revenue retention rate of 115%. That missed estimates of 118%. What else was it? It's just really just pulled the thing. I'll talk about it on the break or on the news. We'll be back there in a little bit. Thanks for joining me today. We'll see you on the 4 p.m. market update.